We're at the Silver and Gold Summit here in San Francisco, and my first guest today is Nolan Watson, CEO of Sandstorm Gold, a nearly $800 million market cap streamer. Nolan, good to have you back on the show.
Well, thanks. It's good to be here.
It's been too long almost, and I have a lot of things to catch up with you on. And this morning, I know you were on a debate with Rob McEwen of McEwen Mining, who's been very vocal almost against the streamers.
Yes.
I remember last year at PDAC, he told me how he sees streamers almost as a plague to the industry. So I'm curious to know what came out of this debate today.
Yeah, I think candidly it was a constructive debate in the sense that we actually had a lot more common ground than we thought. I think one of the challenges with the mining industry in general and how it finances itself is that the capital often comes with people who don't have the same incentives as the rest of the shareholders. And I think that's one of Rob McEwen's big points, is that he, as a CEO of his company, owns a large percentage of the company. He's heavily incented to make his share price go up, and other instruments don't necessarily have that. Streaming actually is one of the few instruments that does cause incentive alignment with shareholders, because a streaming company only does well if the underlying mining company does well and continues to produce a lot for a very long period of time. And so I think the message that I like to put out there is that Sandstorm, our job is to sit down with a specific mining company, understand their specific situation, their specific assets, and tailor make a financing package for them that makes sense for them, that has incentive alignment. Maybe we even put in a little bit of equity. And I think that message resonates with a lot of people, and I think it even resonated a bit with Rob.
Okay, so you obviously want to see more miners turn towards streaming, Nolan. What's your number one reason why they should?
So I wouldn't quite put it that way. I would say that there is a time and a type of equity financing that is good for shareholders. If you can issue equity that's above NAV, you should do it. You should do that before doing a stream or doing debt. There's a time when you shouldn't do equity. If your share price is trading at 0.1 times NAV, don't issue equity, do something else. And so when you look at streaming, there are some really good stream structures that make sense, that turn back some of the economics to the actual underlying mining company later in life with drop downs, etc. Those streams can be good. There are other stream structures that can be bad, and the same with debt. Some debt is friendly and flexible, some debt is not, and it's rigid, and it's going to almost certainly end up bankruptcy. So the message is, understand your asset, understand the cost of each different type of structure, and figure out where streaming may fit into that.
And many would argue, well, that's just a new form of hedging. What do you say to that?
Well, in a hedge, you're just making a bet on the price. You don't actually get cash up front. So our entire business model is a form of financing to allow mining companies to go build their mines, or if they've already built their mines and they've got the capital structure wrong and they borrowed too much money and now they're in trouble, they can come to a streaming company to bail them out, or more longer-term patient capital.
Let's talk Sandstorm Gold. Your third quarter results came out. You're up about 16 million in revenues. Last time I spoke, your focus was on reducing debt in 2016. As we're about to start the new year, what's your focus now?
Yeah, so our focus was on reducing debt, and that's because at the end of 2015, we spent over $150 million buying a bunch of streams at the bottom of the market, and we didn't want to issue much equity at that time, so we drew down on a revolving facility that we have that was $110 million in size. And so since then, we did some non-core asset sales, we had significant cash flow from operations, we did a small equity financing, we repaid all of that debt, we now have $25 million of cash in the bank, so the goal is flipped again. It's now, let's go figure out how to allocate that capital. The cash is coming in very quick, and we need to figure out what to buy, and so you're going to be aggressive. You're actively looking. We're actively looking. You're hungry. We are. Okay, what are you looking for? What sparks your attention that you're like, that's a company I'd want? So what we're looking for, in order to get above average risk-adjusted returns for our shareholders, we need to find situations where the underlying mining company, their asset, is not being fully appreciated by their shareholders. And that means exploration upside that our geologists believe in that maybe the market necessarily doesn't. So we like to kick the tires, we like to go to projects, we like to understand the geology, and when we find something special that the market is missing, that's where we like to find a way to get a structure that allows us to get an upside. Which countries do you like? I like diversification. So that means as many countries as possible. Obviously, there are a few that we don't want to go to, Venezuela, for example. Okay. Potentially some of the stands. A few other countries, China, we probably wouldn't go to quite yet, but we're in over 20 countries around the world right now at Sandstorm, and that's the objective, is be diversified enough so that any government can go crazy for any period of time and it doesn't really overly impact us. Let's talk about the price of gold. Last year at this time, many had discounted the metal.
How do you see it set up here?
Well, Trump just got elected. Gold did the opposite of what everyone thought it was going to do. I'm actually pretty optimistic. I think that this is a sort of short-term knee-jerk reaction to an optimism about all of the great things that are going to happen in the economy. There's going to be more bumps along the road. There's going to be more challenges. People don't realize that with increasing interest rates, that means decreasing bond values. The world has wiped out over $1 trillion of bond values in the last week. That's going to have implications to it, and it can't keep going. So I think gold price is going to stabilize here and potentially move back up a bit.
But how do you protect yourself against this volatility we've been seeing in the gold price?
From a Sandstorm perspective, we try to do it through our balance sheet. So we like to have low levels of debt. We always like to be able to, if we ever draw on our line of credit, to be able to pay it off in the same year. We don't have any debt. We have cash coming in all the time. So we don't really have a lot to protect against. We don't need to hedge. We're in a good diversified position.
Nolan Watson, Sandstorm Gold, thanks so much for stopping by. Thanks for chatting with us.
Thank you.
And thanks for watching our coverage. We just kicked it off, so be sure to stay tuned to Kitco.com for much more. Thanks, Nolan.
Great.
Always a pleasure.
Thank you.
Thank you.